Something you'll often hear in trading is the trend is your friend, follow the trend, etc. Those are all great, little idioms, but at the end of the day, what does that mean? How do you profit from it? How do you learn it? Today, we're going to talk about the 5 ways to understand stocks, trend analysis, and how to spot those trends. Hey everyone, before we get started, be sure to like, share, subscribe, and if you're on YouTube, ring that little bell to be notified as soon as we drop a new video. Check out your notifications on Facebook. We post these videos everywhere. Add your notifications on Instagram. The cool thing is when we publish a video, we publish it everywhere. YouTube is probably the best place for these. So if you are watching on any of the other platforms, maybe jump over to YouTube, go to StocksToTrade.com or just search for Stocks to Trade and then ring that bell. You'll get that nice little pop-up when we go live, when we drop a new video, etc. And be sure to share it with your friends. Let's get that word out there. So, all right. I am lead trainer with Stocks to Trade, StocksToTrade.com, Tim Bowen. Let's talk about what the top 5 things you want to be looking for when we're talking about what is a stock trend and how to spot one. So ultimately, when we're talking about a trend, and I hate to oversimplify things, but ultimately the best way to think about it is, if we're looking for whether it be steadily uptrending stocks or steadily downtrending stocks. And yes, bear with me on this drawing, but what we're looking for here is, it's hard to draw a bar or a candle chart. But if you're familiar with candlesticks, you'll see what I mean. It's much easier to draw line charts to get my point across. But what we're looking for, and by the way, we actually just dropped a recent video talking about the different types of chart patterns, whether it be candlesticks, Heikin-Ashi, line charts, etc. So you can go to the archive, be familiar with candlesticks is what I'm telling you. But ultimately what we're looking for most of you, I'm guessing, are newer traders. You're learning, you're new to this game. That's why you're on YouTube. That's why you're on Facebook. That's why you're here. And I appreciate you being here. But ultimately we're looking for that kind of higher highs and higher lows. So when I say that, we're looking for a stock that every day is just trending higher. So each day closes a little higher, and then the low of the day is a little higher. So as if you were looking at it on a line chart or even on a candle chart, you'd see that steadily uptrending move. And that is what we call the trend. We want to look for stocks that are steadily uptrending in hot sectors, okay, with unusual volume. Those are some of the big things. We'll talk about other indicators, but those are the biggest things, because if you've got an electric vehicle run like we've had the last year and a half, you've got unusual volume, you've got a steadily uptrending chart that's breaking through key support and resistance levels, that is a great trade setup, especially for a newbie trader. Now, the reason I mention that is you want to avoid steadily downtrending charts. Now, if you're looking to be short bias, you're looking to short stocks, you're going to look for those steadily downtrending charts that are breaking through resistance levels. Now, that being said, I beg all of you, learn the mechanics of trading on the long side. The risks are lower. There's less fees. There's less, you don't have to worry about borrowing shares. There's just a lot that goes into short selling that I think you need to have that foundation going long. So that's why I mentioned the steadily downtrending charts. Don't try and trade those on the long side, okay? Because most of you, and what I recommend, and this may sound counterintuitive, we're looking to trade the sketchiest of the sketchy stocks, okay? And when I say that, we're day trading them. We're not true believers. We're not investors in penny stocks. The reason we focus on low price stocks and we focus on penny stocks is they have the potential to make the wild moves, 50%. 500%. I mean, in one day, maybe 5,000% in several days. That is doable in penny stocks. So that's the way you really grow your account. I mean, as much bad reputation and as much disdain as penny stocks get, in my opinion, and you can feel free to disagree, even versus crypto, I don't think there's any better way to get you from that small account to over to the PDT, up to that middle-sized account than penny stocks. Now, once you get up to a $50,000 or $100,000 account, Then you can start looking at higher price stocks or real stocks or ETFs or some of this stuff. But the penny stocks are the way to go because they make the wild moves. So that being said, when we're looking for these just steadily uptrending stocks with building volume, it's growing, it's breaking through resistance levels. And then we're looking for those 60-day moving averages. We want that stock to be above as many moving averages as possible. Why do we care about it being above moving averages? There's a lot of day traders. There's a lot of momentum traders that are running those EMA and those SMA scans. We want it to be above VWAP. Ultimately, I don't recommend using that many technical indicators. I like you being more focused on technical analysis and using VWAP, price volume VWAP. But if you can start lining these things up and they're above the moving averages, they're above resistance, they're above VWAP, they're above the previous day's close, they're above a 52-week high, maybe even a multi-year high, maybe an all-time high, the more of those you can combine, the more likely you're going to get that continuation into the next day, into the next week, etc., which is also PDT friendly, okay? When you can line up as many of these, the story, the volume, the chart, resistance, moving average, steadily uptrending, unusual volume, short squeezes, hot sector, that gives you that much higher likelihood that the stock will quote unquote continue and gap up the next day, which is great because now you can buy these steadily uptrending stocks. AMC, I've got on my screen, this thing has just been grinding higher for the last 3-4 days and broke out today. Tomorrow's Friday, probably going to gap up again. So that saves you those day trades. Now, ultimately, there's always risk. Maybe tomorrow the stock gaps down, you take your loss, losing's part of trading. But if you can check all those boxes, then you look at those post 2 p.m. moves, which is my favorite time of day, especially for newbie traders. Again, check out the archive. We've got hundreds of videos talking about this. Every day on Pre-Market Prep, I give you afternoon setups. Pre-Market Prep's the live session every morning at 8:30 Eastern everywhere. So you hit those afternoon moves, stock trends up in the close, gaps up the next day, you sell the next day, you don't quote-unquote burn a day trade at that point. Really, the best way to manage your day trades is trade late day and only take that day trade if you get stopped out. You have to honor your stop in low price stocks. You have to. You have to stick to that stop. Those are those points when you take that loss into the market close, burns a day trade, you come back the next day, no positions, ready to reattack. So those are the biggest things I want you to think about. And, you'll see me on these videos all the time doing the hand thing. If you can go back and listen to these criteria I gave you, and you can line up as many of those as possible, and you can check those boxes, as I say. Actually, over on the Stocks to Trade blog recently, we posted kind of a really long how-to talking about that checking the boxes methodology. A lot of people, I don't know, I know in this day and age, it's all about TikTok and Instagram and video. Check out the stockstotrade.com/blog. Tons of information there. Now you got to read. I know most people don't like to read these days, but maybe you should read a little bit. But that being said, check it out. There's that box checking guide, I would call it. I think it's 10, 15 pages long. I mean, it's pretty inclusive. And I talk about that methodology, and that increases your odds of success. So that being said, there's no more truer things in penny stocks than, trust that trend, join the trend, join the momentum, take realistic gains, have that plan, think about that 3-to-1 risk to reward methodology. And I'm telling you, the second, there's a lot of rules in penny stocks, but in relation to this point, the second most important thing is avoid downtrending charts in penny stock land. I mean, run away as fast as you possibly can, because these stocks, a lot of people will fall for that idea. It's got to bounce. In penny stock land, there's thousands of stocks that never, ever, ever bounce. Uptrending, downtrending, join the trend, follow your indicators, focus on volume, unusual volume, check those boxes, Look for late day trades, take those gap ups. That's the way to get over the PDT, and that's the way to be consistently profitable over time. I think another great way to be consistently profitable over time, check out the Steady Trade team. It's the mentorship program. I work with Mike Huddy, Kim Ann Curtin. We've got some new mentors coming on board where we really get in depth on everything. I've done 2,700 webinars in 5 years. I think everything has been covered, and we're always improving and always growing every day. Check out the Steady Trade team, and I'll see you on the next video.